It's Brian Preston, the money guy.
Let's close out the show with our 60-year-olds. This is game time. You've been building on this path for all these years. This is the culmination of your journey into a success story. So let's talk about what are we doing here. This is when you do life how you want, when you want, and the way you want. I mean, it's really an incredible thing.
Hopefully in your 60s, you've not just figured out what you're retiring from, what you're going away from, what you're moving away from. You've thought about, what am I retiring to? What's the next phase and stage of my life going to look like? If you haven't figured that out by your 60s, you need to start spending some time thinking about that, because that, in addition to the financial piece, is going to be a huge piece of whether you're successful in retirement or not.
It's also time to start collecting those life dividends. When I'm talking about life dividends, I'm talking about grandkids.
Yep.
I'm talking about you get to travel when you want. And then the last thing, you get to go to shows, you get to go to the shopping centers, you get to go do sports while the rest of us work. You kind of get to be that contrarian.
Did you put in the show notes empty Costco's and Targets? That's what you're looking forward to in retirement?
I go to Costco on the weekends, and it's bedlam. I mean, when I go to get my $5 pumpkin pie that will feed, essentially my family for 2 weeks. I mean, it's bedlam there.
It's bedlam.
You are pushing people out of the way to get to the pumpkin pie. I think life dividends, why the 60-year-olds, they're not dealing that. They're like, who goes to Costco on the weekends?
Nope,
Suckers
10:30.
that work. The 60-year-olds don't have to do it. This is game time. So let's talk about the financial planning pyramid.
From a cash flow standpoint, there are some really big decisions you have to make in your 60s. Decisions on retirement distributions. Where am I going to pull money out of? What accounts am I going to pull from? When am I going to start taking Social Security? How am I going to handle my pensions? Am I going to start drawing them now? Am I going to wait? How am I going to do my pension? Am I going to do 100% joint and survivor? Am I going to do single life annuity? There are a lot of big decisions you have to make in your 60s that are going to affect your 70, 80, and 90-year-old self.
Well, I think it's important to say, financial planning pyramid, this is something any good financial planner was taught when they're getting their CFP training. A lot of things are going to be, you're going to see an umbrella element here, is that a lot of this stuff you might need a professional. Because let's face it, when you're doing retirement distributions, your taxability of Social Security is impacted.
Yep.
Your pensions, all these things are going to come in. Your Medicare premiums, you'll see. You need to pay attention to cash flow planning because it's so important with the unintended consequences. Be careful of the things you just don't know, or your blind spots. And that leads to cash reserves. Remember, most people, we talk in terms of 3 to 6 months for cash reserves. Once you're living off these assets in retirement, that number expands out to 18 to 36 months of very safe, secure assets. So any fluctuation, any volatility in the financial markets, it doesn't impact you. You're okay.
That's
and
right.
You have a plan for it.
That's one of the best things you can do for risk management, is make sure that you do have that cash reserve in place. But you can also look at other things like Medicare, making sure that you have your health insurance covered the right way. And we've already talked about this, long-term care insurance. If you are someone who thinks you might need advanced age planning, hospice care, skilled nursing care, this is not a bad time to just revisit, does a long-term care policy make sense for my situation?
Yeah, and it's one of those things you might be able to self-insure if you're $3 million or greater. If you're somebody who's in that $1 to $3 million range, might be something just to go out there and check out. Investing, Bo, this was yours. I thought this was brilliant in the show meeting. Don't turn into a turtle. What did you mean by that?
Yeah, just because you turn 65 doesn't mean that all of a sudden you take all of your investment assets and you bury them in a coffee can and you put it under your mattress. No, it's still part of your portfolio has to pay for your 70, 80, 90-year-old self just because you retire, just because you move to financial independence. A bigger piece of your pizza pie might be in risk-off or conservative assets, but you still need growth assets. Don't think just because you're retired now, you got to jump in the shell, you got to hide, you got to be a turtle. So when you hit financial independence, when you're in your 60s, don't turn into a turtle.
Well, no, I will flip the script on you. You don't want to be just a hare either. You don't want to be the
right.
rabbit that's running wide open too. Because we have people, especially adult children who are clients that bring us their elderly parents. Yep. Sometimes I'm like, whoa, they bought that portfolio in 1997. I mean, that's a 1999. I mean, that looked like it was right before the dot-com bubble. pay attention to that stuff. And then that leads into when you're thinking about, don't let fear lead you into some bad decision making.
Yeah, don't get sold annuities or CDs or bad decisions just because you're afraid. There's going to be a psychological shift when you go from working with your hands and your back and your feet to letting your army of dollar bills work for you. Don't allow the emotions associated with the decision to make you make poor financial decisions that are going to have a long tail throughout your whole retirement.
And then this is kind of an echo from something we talked about earlier in this section, was on tax planning. Pay attention to the taxability of Social Security. Medicare surcharges. Also, your Medicare premiums will be impacted on where your income levels come in. Pay attention to all those things, because those are the unintended consequences that you will really need to be zoned in on when you're doing tax planning.
Yeah, and at this level, you probably should have a financial advisor. If you are doing advanced strategies like Roth conversions, because there are so many tripwires like Social Security, like Medicare, you probably want a professional in there to help you navigate that and navigate it well. Because there's some big stuff that's going to happen in your 60s all the way until you get to age 72.
And that leads to our last section, the estate planning. This is where go ahead and have those open conversations, good conversations, healthy conversations with family members so you can share what your wishes are, and then also start working on that legacy plan. What do you want? All that you built, kind of what's the long-term vision? Don't keep that a secret. Go ahead and share that stuff so that it can kind of work its way also into your loved one's plan as well.
Now, if you're in your 60s, you're not really spot checking anymore, right? You're not really trying to say, how much should I start saving? But here's what's really interesting. Even a 60-year-old who saved $740,000 by the time they get to 60, if they just wait till 65 to start living off of those assets, and we can assume a 6% rate of return, that 741 can still turn into $1 million by the time that they get to 65.
That's really incredible.
It's
if you think about it,
unbelievable.
3/4 of your money, yes, comes from you if you're trying to get to $1 million status in 5 years. But the other 25%, army of dollar bills, even with only 5 years. That's powerful.
And if you want to be a financial mutant, you double that number. It's about a little under $1.5 million. Will still give you the propensity to get to $2 million by the time you get to 65.
So here's what I'm looking at. I get a visual of a person that comes to a financial advisor with a little under $1.5 million. We're going to be able to, if you were meeting with somebody, it's not unrealistic to think you're going to have $2 million or greater in just 5 short years. Man, that's powerful. That shows let your money, let your army of dollar bills work just as hard as you do with your back, your brains, your hands. Take the load off, man, and let your money do the work for you. I think you'll see a lot of these decisions you've made early in your life really will serve you well, and let this be a celebration moment for you as you do reach that point of starting to get those life dividends.
Being a millionaire, even a multimillionaire, is attainable. It is incredibly simple, but it's not easy. And you have to understand that as you age, as your life circumstances change, the things that you focus on change, the things that require your attention change, and that's okay. If you can make sure you're staying on top of these things, you can set yourself up for long-term success, and we're going to be the team that helps you get there. If you have not had a chance to go to our website, moneyguide.com/resources, there is a plethora of free resources available for you out on our website. Go check it out, use that, and let that be the fuel that lights your fire to get you into financial independent status.
And I think it's worth repeating, a lot of the things, especially in the more advanced, stages, so you get into your 40s, late 30s, 40s, 50s, and 60s, a financial advisor was really, you need teammate, you need a co-pilot. Yep. You said it best. I mean, all through this show, there's this theme of you need help.
Sure.
You need a financial advisor. And I think we would be horrible business people if we didn't share. This is exactly what our day job is. We are fee-only financial advisors who work with clients all across the country. We are blessed that we get to do what we call the abundance cycle, where you come here, we give you away free, we give tons of free information, you learn, apply, grow. There's going to be a whole group of you who go watch this show, and you say, I need a co-pilot just like that can help me from my blind spots, work me through all those things. We hope you'll go to Abound Wealth, practice the abundance cycle. That will make us so happy. Another way you can help us out, we are so close to 100,000. We're trying to get to 100,000 by year end. Love to have you. Go to our YouTube channel, subscribe. Even if you're listening to the podcast, go check us out. Moneyguy.com, aboundwealth.com. I'm your host, Brian Preston, Mr. Bo Hansen. Money Guy team out.